Hi, my name is Krista Nikolova,
My name is Hyder Ken.
and we're doing Zoom Info Technologies. Zoom Info was created in Vancouver, Washington by Yoaton Stern and Michael Gray. They established it in the year 2000. However, in 2007, Henry Schuck rebranded it. In June 2020, Zoom Info officially became a publicly traded company. The company is a subscription-based service that provides database information about services, companies, sales, and even people. Zoom Info qualifies as an emerging growth company as defined in the Jobs Act. Comparables of Zoom Info are Guidewire and Dropbox. They both offer similar services. However, Zoom Info has reported negative earnings and has a high PE and PR ratio. In fact, both Guidewire and Dropbox are doing much better compared to Zoom Info. The PE and PR ratios are obtained from Yahoo Finance. Zoom Info IPO was filed in February 27, 2020, and shortly, a couple months after, they were officially public. The pricing date was June 5th, 2020. JP Morgan, Stanley Morgan, and Barclay Capital are the lead underwriters of Zoom Info. The investing banks offer initial public stock offering for the companies that are already publicly traded. Underwriting discounts are $1.08 per share, and the commission is $47,890,900. The underwriting spread is 5.14% of the offer price.
The number of shares sold are 44.5 million, while the outstanding shares are 45.4 million. The lockup provision for Zoom Info was 180 days. During this time, the company is not allowed to share any information that is what is not public at the set time. This is made to ensure that the company is fair with all knowledge of the shareholders. All the shares sold in IPO or primary offering is total 44.5 million. The IPO underpricing is 85.19%. This means that the stock was undervalued. The offering price of $21 and closing price is $38.89 on the first day of trading. While there is much more room to grow in June, July, the company was doing pretty good, according to the graph. However, this is constantly changing with market and economy, and it will continue to change. The one thing I learned from this project is underpricing of IPO is a highly intense, detail-oriented process, and it takes more than just calculating some ratios to come up with the actual number, and we find out later in the day if it's undervalued or not.
What I was able to find out from doing this project was the fact that even if companies aren't doing financially well, they can go public. And this apparently happens a lot when we're dealing with technology-based companies, and I didn't know that, so I thought that was really interesting.
And that is going to be all. Thank you.